Hi guys, welcome back to X Sanyong channel. The global pandemic has affected the whole world. More than 151 million people are infected. That is 1.9% of the total world population of 7.9 billion people. However, there is a glimmer of hope in the arrival of vaccine. Any vaccine that is developed successfully is a game changer to the world, and therefore many has invested into the vaccine stocks. This video is not about which vaccine is more effective or any news related to the COVID, as we are not doing medical research, but we are just curious and would like to share on the vaccine stock performance. Here are some of the pharmaceutical stocks that have developed vaccine for the COVID-19, which are Pfizer, Johnson & Johnson, and Moderna. For a quick overview, it is said that Pfizer and Moderna vaccines work the similar way, and they are made using the messenger RNA, a technology that delivers a bit of generic code to the cell, while Johnson & Johnson use a different approach to instruct human cells that trigger the immune response. Which vaccine are more effective? Honestly, we do not know. In this video, we will compare the three pharmaceutical stocks, which are Pfizer, Johnson & Johnson, and Moderna. First, Pfizer. Listed on the New York Stock Exchange, NYSE, one of the S&P 500 stocks. Pfizer was founded in 1849 and headquartered in New York, US. The stock price has increased from $36 last year to $38 over the year, which is about 6%. The company remained profitable in 2020. However, compared to pre-COVID year in 2019, its net income is lower by 41%, and so as the earning per share EPS, which is now at $1.71. At the current stock price of $38, the price to earning ratio, the PE ratio, is 22 times. We can compare to the historical S&P stock PE ratio in the range of 13 to 15. More accurately, we should compare to the healthcare industry average, which is at 22 times. Hence, it seems that Pfizer is trading at fair value. It is worth to mention that Pfizer is a dividend-paying stock. If that matches your investment goal, you can go for it. Many companies have slashed the dividend rate last year. However, healthcare sector is doing good. In 2020, Pfizer has paid out quarterly dividend at a total of $1.52 per share. The dividend yield is about 4%. The good news is Pfizer continued to pay out the first quarterly dividend at 40 cents in March 2021 and also just declared the dividend payout of 39 cents in the coming June. Second, Johnson & Johnson. Similar to Pfizer, Johnson & Johnson is also listed on NYSE, and it is one of the S&P 500 stocks. Johnson & Johnson was founded in 1886 and is headquartered in New Jersey, US. The stock price has increased from $150 to $164 over the year, which is about 9%. The company's net income dropped slightly by 3% from 2019 to 2020, and the earning per share dropped by 2%, currently at $5.51. At the stock price of $164, the PE ratio is 30 times, slightly higher compared to Pfizer and the healthcare industry. It is more expensive in valuation compared to Pfizer stock. In terms of dividend payout, Johnson & Johnson paid out a total of $3.98 per share in 2020. This makes the dividend yield to be at 2.4%. Same as Pfizer, Johnson & Johnson also paid the first quarterly dividend at $1.01 in March 2021. And they also just announced a dividend payout of $1.07 per share in the June later. Thirdly, Moderna. Moderna is listed, but it is not in the S&P 500 due to its smaller market cap. Moderna was founded in 2010 and is headquartered in Cambridge, US. It is a biotech company developed vaccines based on messenger RNA for treatment of various diseases. Moderna stock skyrocketed the most over the year, with current stock price of more than $175 compared to just $46 1 year ago, an increment of more than triple of its initial price. The company has been making net losses for the past few years. In 2020, the net loss was a negative $747,000 the net loss is worsened by 45% compared to 2019. Earning per share is negative $1.96. Therefore, it is not meaningful to compute a PE ratio for comparison. Moderna is a non-dividend paying stock. Investors who buy Moderna stock should focus on its capital growth potential rather than the dividend income. Why would Moderna stock increase so much more than the other pharmaceutical companies? It probably reflects its earning potential, as it will increase the vaccine production to reach the target of 600 million doses this year, and hence able to recoup all the net losses and make big profit this year in 2021 if the pipeline got approved. Among the three pharmaceutical companies, risk-averse investors will likely prefer to go for Pfizer and Johnson & Johnson, as they have the longer track record of operation, being profitable and also paying out dividend to the shareholders. Now, it's the time for the healthcare companies to prove to their investor whether or not they should put in funds to support the R&D and the production and vaccine. This will generate more revenue for the company and will have higher growth rate in the coming years. Thank you for watching our video. Please comment below if you have a different perspective. Do give us a like and subscribe to our channel, as we will continue sharing about stock investing. See you again in the next one.